Hello, today is Monday, December 1st, 2008. This is Brian Shannon from alphatrends.net. The markets got brutalized once again here today. The NASDAQ 100 lost $2.19 or 7.5%. You can see here that obviously we had a big red candle in here today and the volume picked back up. We've been a little concerned that the rally has come on diminishing volume, and it was basically running on fumes, as I said last Friday. And this morning we saw the market gap lower and basically remain weak all day. We had a little bit of a bounce attempt here late in the day, but it was unable to get above the mid-morning highs, as well as on the 1-minute time frame. It was unable to get back above that declining daily VWAP. So we continue to be in a bear market. We had a nice bounce, and now that bounce has seemed to have run out of steam. It ran out of steam basically near that 50% retracement of the large decline from the election high back here on November 4th to the lows that we saw a week and a half ago on that Friday afternoon. So now here's where we are. We're back down again below important support, what should have been important support right here at this level, which is at about $27.20. These lows right here that became resistance there, and then the market was able to hold above for last week. So we were initially looking at this level here at about $27.60. That level obviously was cleaned out pretty quickly, and then it was, basically it wasn't really cleaned out pretty quickly. I shouldn't say that, because we came down to the 5-day moving average in that area and tried to hold these lows from last week on I guess that was I don't know, Monday and Tuesday. The lows from Monday and Tuesday, it gave that up, and of course back to the 30-minute time frame, you can see we're now back underneath these lows here, which on the daily time frame coincide with this line right here. So we remain in a bear market. Maybe we're going to make a higher low in here, but you have to look at this thing still as guilty till proven innocent. If we look at Fibonacci based on the rally from a week and a half ago Friday to the highs last Friday that we saw in the holiday shortened session there, we see that the market has come down approximately 2/3, and that 2/3 retracement also coincides with this gap level. So this is basically our last chance area, that if the market's going to hold up and make a higher low, that it should do it somewhere basically between 2650 and 2670. But again, looking at the larger term picture, there's no reason to be optimistic here. We only want to be aware of potential bullish scenarios, but right now the market just isn't telling us that there's any reason for any such optimism, just as we see in oil. Oil, we've been looking at it, it's down a lot, it keeps going down further, and a lot of people are looking for the bottom in here. Again, bottoms are a process, not an event. We've been focused on this 45.5 level. I said last week that it needs to clear at least 45.5 before we have an attempted rally that can hold for more than a day or two. Friday, we saw that the market got down to that 5-day moving average, and I said basically if we get back below $40.50, that a test of the lows was likely, and it looks like that's exactly what we're having here, that we broke below 41, then this 40.5 right in here, and now these lows, the lows for the last couple of years are obviously within reasonable distance. This low back here, which is one of those weird optical oddities, it looks like it's lower than where we are now, but it's actually $42.56. So we're at multiple year lows here, all-time lows for the USO since we've seen this ETF begin trading. So continue to emphasize there's no reason to be bullish on oil. There's just nothing there that suggests a bottom is in formation. Down another 5% today. It continues to be a global liquidation of basically, like I said last week, anything with a bid. The semiconductors we had seen on the daily time frame got up to this prior low, low right here. This, I was going to say dramatic sell-off low where it had gapped down to that level, and then we'd seen that rally through into the election. But it got up to that level on Friday or Thursday of last week, and that's basically where it ran out of steam. Here again, this is that level right around that $17 area. This market broke lower. Now you look at the 5-day moving average, and I talk a lot about, as long as the 5-day moving average is advancing, then you want to consider the intermediate term trend innocent till proven guilty, but only as long as market action holds there and then is able to bounce from it. You want to give the benefit of the doubt in there, which means it's not generally the best place to get aggressively short, although it would have worked today. That you could have gotten short on the break below that. The point is, it's a guidepost, and we have to look at evidence on the 1 and 2 minute time frames. And you look at the 1 minute time frame, it was below that daily VWAP all day long. We saw the same thing. There was a little bit of an attempted rally here late in the day with about an hour to go, but it was unable to get above that declining daily VWAP, and then the sellers pretty much pounced on this thing right up until the close. So the financials lost 16% today. Just amazing percentage numbers. This isn't even leveraged. I mean, this is just a regular financial index, the XLF. Closed down at $10.55. We'd seen that this market had made it up to this prior level of support at that $13 level where we were looking for the potential for resistance. Obviously, hindsight tells us clearly that it was. That also came, here with this Fibonacci where we're looking at that 50% retracement of the highs from the election down to the lows a week and a half ago. So it retraced 50%. The market gapped lower, and the inability of these markets to gap on a bounce lower. If you're looking to buy, the only place you should be looking to buy is maybe getting back above that daily VWAP right in here. But then when it takes out the lows for the day and makes these lower highs and lower lows, it's just really foolish to continue to hold any long positions. You can see that the financials just in the last hour lost $1. Huge percentage movers here. Still a lot of fear, a lot of panic liquidation in there. The levels that we're looking at as far as potential support were clearly taken out. We're looking at this level right here. We're looking at these prior highs at about $12.10. Or I'm sorry, $12 is what we were looking at. We were looking at $12 and we were looking at about $11.25. Those levels were both clearly violated. If we look at Fibonacci from these lows of a week and a half ago Friday to the highs of this past Friday post-Thanksgiving, you can see that as bad as it is, we've given up probably about 55%. So this would be our last hope of any attempt that this market can create a higher low. I think right around that $10.10 to $10.20. This is the level that this market gapped up to. It's also the level that you can see here of this 2/3 retracement. So I think back below $10 a share, then we're probably heading for even lower lows once again. As amazing as it seems, hope's not a reason. You can't buy down here at $10 a share hoping that it's going to hold. You have to wait for price evidence, and clearly the pattern that we had seen developing last week with these higher highs and higher lows was broken right from the open today, and then we saw the trend reverse to lower highs and lower lows. And again, only price pays. That's what you have to pay the most attention to. SPY was down $8 today, or 8.98%. Again, just amazing. These are unheard of volatility, percentage moves. You look at this daily time frame, we're back below these lows right here. So we were looking at maybe this was a bear trap, but we're back to a lower low again. I'm sorry, not quite a lower low yet, but looking like we're heading back down to at least test those levels once again. This market, based on Fibonacci off the election highs to the lows a week and a half ago, almost made it to that 2/3 retracement level. Not quite, but and again, as I was saying, you can't sell short because the volume is declining, because this rally was 21% over the course of 6 days or whatever it is. And had you been short early, it would have been very, you would have been punished severely. What you have to look at instead is not you have to look at this and say the volume is diminishing. We're running out of buyers. When the supply comes in, who's going to be there to catch them? And that's why I said that these bear market rallies rob the market of that buying pressure, because shorts cover in here, sideline money gets all excited, and when we stop seeing these big short-term rallies, holding on, when we have less people believing that that was the bottom, then we can slowly start that rebuilding process of looking for for real evidence that the market is correcting through time and going to establish a bottom. But right now, still not there. $80 and about 30 cents. That's where the 2/3 retracement of this most recent rally is. And again, I'm going to emphasize the same thing I've been emphasizing all year, that it's okay to trade these rallies for 1, 2, 3 days at a time if that's your personality. I personally prefer day trading. I think it's a great day trading environment. I just can't stand to come in and see my positions down on these opens. You've got to do what's comfortable for you, but keep in mind the overall structure of the market and understand where the odds favor buying and selling. And had we gotten maybe back above the daily VWAP and that flattened out, and we'd seen some volume on a push higher, then maybe we would have had a different short afternoon scenario. But instead, we have to go with what we see, and when it breaks down, we get that panic liquidation once again, and it's just better off being safe in this environment, protecting your assets. And hopefully you'd seen, for the people who purchased the book, I did that also to incent some people who haven't purchased the book. I put some 5 or 6 short ideas on a video on the blog last night, and obviously all of them worked out very well. So hopefully you're trading smart and listening to the message of the market.